The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 22nd. That's it. This is the March 22nd, the fabulous Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Absolutely. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary day, an extraordinary weekend, an extraordinary life. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here today, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and of course in the Tiger's Den. Well, we take any and every and all pings. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down. Well, all the indices are down. The Dow's up 350 points. It's about 1 3/10%. The biggest mover percentage-wise to the downside is the Russell 2000, off 3% or 48-point-roonies out there. So everything trading lower. Spot volatility index is up by 20% as we speak right now. It's not the close, but certainly the end of the day rate of change will be important, as well as where is it in relationship to its 50-day exponential moving average. You got declining issues in the New York Stock Exchange outpacing advancing issues by about 4-1 as we speak. Gold is up $4. Treasuries, both the 10-year note and the 30-year bond are up. Well, you get the 30s up 1%. And the 10-year note is up 0.5% out there. So we're going to take a look at all of that, try to put things in perspective out here. And because of some questions that have come in already, let's try to understand or gauge what the market is doing. Now, earlier, maybe, I don't know, it was around 12 o'clock or so, I had posted inside the Tiger's Den, which is our little private chat room out there, that the top in the 30-year treasuries was likely in, that the high was in. Now, the reason is, and here's what I want to do. I want to just take this chart here. We're taking a look at the, look, this is the 30-year Treasury chart. The symbol out here is just using my composite symbol so I can grab all of the historical data out here. And what I want to do, let me do this. Let me just start from scratch if I can. Of course I can. I'm in charge of the screen out here, right? So what we're going to do here, and it's just really important because it goes with the thesis. No, thesis is the right word, but it goes with what we're going to take a look at today and a couple of different things. So the first thing, when I take a look at this 30-year Treasury, so you and I, we are pattern recognition masters, experts, whatever we want to call that. And so the pattern that jumps off of this blank chart to me is identifying support and resistance, right? One of our first key roles in doing that. And so here what we can see is the resistance level. Now, the resistance level that I'm taking a look at from the January 31st high, and you'll see just simply a red horizontal line going across there. We don't have to, this does not have to be exact, so to speak, but this is approximately where that resistance level is, and that really contained price up until 2 days ago, up until the Fed, released what it was going to do, and then we had the Powell speech. The bottom of the where I take a look at support was established by the low on January 18th. Now, the reason that we know that is because both the high and the low out here were tested on several occasions, and both contain price. Now, the beauty of this is that it sets up the consolidation, the ideal pattern for being able to provide you and I with a measured move if price breaks through either of these. Doesn't have to. And it can be greater than or equal to the measured move. But if we take a look at that, this allows us to identify a consolidation. And the consolidation, the little rectangular box that I put up on my screen, is equal to the high and low of that line that's out there. And then what we can see, and the reason that I sent out that message or just posted something in the den, was because what we can see is that the price of T-bonds made that measured move, and it was at about noon, maybe it was just before noon or something. So for those people, those folks that were long the TLT, and of course it depends on the time frame, the Treasury bonds have made their move. Now, that does not mean that price has to end here. Doesn't have to end here. But what we're going with are probabilities and odds and so forth. So the reason that we start with this is because I now want to come over and take a look at the Dow. Now, in the Dow, we were looking at a daily chart when it came to the T-bond futures. Here, we're going to take a look at a monthly time frame chart, because this will, I believe, or I hope, will go ahead and put in perspective what Stevie's looking at. The same kind of thing, really. If we take a look at the resistance level, it was established back here in January 2018 at the 26,616 level. Yes, did we exceed that? Of course we did. We did that in both September and in October out here. But that being said, this is my level of resistance for, and you got it, for the consolidation, because here's the bottom of that. Now remember, I like to use the body of the candle, and so the mere fact that we had the extreme emotion as we did back in December, where price on a monthly basis was able to push down through that consolidation, still when the end of the month came around, the close was on it or very close to it or slightly above that level out there, really establishing our consolidation area. So now what we can do is we can draw that same rectangle. We can draw it to the upside, because at this stage we're into consolidation. I have no idea which way the consolidation might break, but what we can do is we can take a look at that consolidation to determine that measured move, and in doing so, we know that if the Dow busts above, closes above the top of that consolidation, right now we're calling it 26,616, then the measured move takes you to 30,012. Likewise, if we bust through, close below the bottom of the consolidation, we'll use 23,240-ish as that level, and move down to 19,882. So where are we now? Where are we now inside of the Dow? We're still inside a consolidation. We're closer to the top of that consolidation than we are to the bottom of that consolidation. Therefore, what we want to take a look at is, are there any early signals to give us some type of feel for, are we headed now down to the bottom of the consolidation? So now we've looked at bonds, we've looked at the Dow. Let's go look at the S&P 500. We come back from this break via the ES Mini. Take a look at support and resistance, whatever else it is we can find. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the charts that you and I are looking at on our screen right now, they're in essence, the S&P 500. We're taking a look at the futures contract. You'll see my little composite symbol out there. And the reason is because, again, our role is really to be able to, in order to interpret the market and what it's doing, is to be able to identify support and resistance. And there's several different things that we can use. As you know, one of the tools that you and I use, and here we've got the daily chart in the upper left-hand corner, the weekly in the upper right, the monthly in the lower left, and the quarterly chart, yes, quarterly chart, in the lower right. And this way we can have a perspective. Now, depending on the type of trader that you are, style trader that you are, you know, you want to use your signals for the different time frames. It's always nice to know what's going on above and below. If you use quarterly, then we'd have to go to the yearly for, but right now, let's just stay with these charts. And let's take a look at the ES Mini on a daily basis out here. And so one of our levels of support is, of course, going to be our daily profiles. So at this stage here, how do we know whether the move that we've seen today is going to turn into something larger? Is this the beginning? Is this the end? Where are we at? Well, one of the things that we know in coming off of the lows from December, and here when we take a look at the profiles, you're going to see the top, the center, and the bottom of the box. This time they're colored. The top is red, cyan color, bluish color, light blue color is the center, and the green is the bottom of the box. And what do we know right now? What do we know right now? We know that support has not been broken inside the ES Mini. Support using the synthetic version of my contract is 2800.25. We have not seen a close below the bottom of a profile since then. In other words, all we have is really just trading back and forth. We saw yesterday was a close above resistance. That was the top of the profile out here, 28.47. What we have not seen is a close below the bottom. Now, if we do, it speaks of a change in trend, a potential change in trend. Where does price go? Well, we have to take a look at other profiles if we're going to go ahead and use profiles. So if we're on the daily, then we'd want to know where the weekly is. What else do we know about the ES Mini out here? Well, if we take a look at just a few trend lines that are out here, let's see if we can find a trend line that makes sense to us with regard to what the market is doing. And voila, we can. Because if we take a look at the low inside the ES Mini, that's the December 26th low, and we just do a simple trend line right to that hammer candle, the low on March the 8th out here, what we're going to see is that the ES Mini has pulled right back into that level of support too. So if we were to see a close below 2,800, whether it's today, Monday, whenever it might be, we may not get there. Right now, all that's going on in the market is nothing more than a test of support. Will the back get broken? I don't know. But if it does, it would speak to a change in trend. That's what we see when we take a look at the daily time frame charts for the ES Mini out here. Let's go take a look at the weekly time frame. We'll do the same thing out here, and then we come back. When we come back, we're able to take a look at all four quadrants so that you can grab a picture of that. But if we look at the TAS market profiles on a weekly basis, if 2,800 were to go, meaning a failure below it, then what we'd be looking at is likely move down to that point of control, that center of the box, 26.72. Could even be the bottom at 25.72. What do we know about the ES Mini as we speak right now? We know that the top of that profile, and there was a close slightly above it last Friday. Don't know where we'll be this Friday, but what we know is that price is traded just underneath that level. That's resistance. If you're asking where's resistance for a weekly time frame trader, it's 28.22. And now we also know where support is. By the way, we're trading right now at 28.14, just a few points down below that level. If there's a rally going into the end of the day and there's a close above 28.22, that's the weekly profile, that's quite frankly bullish. Yes, that's not closing above 28.47 on the daily, but it would speak to a choppy market next week as well. Sunday night, Monday, Tuesday, whatever that might be out there. If we look for different trend lines on the weekly time frame, let's go ahead and pull this back. Is there anything that jumps out at you or me as we take a look at it? I think the answer is no, not really, not at this stage. So we'll just simply go with the daily time frame, which was coming off of the December, I apologize, the December lows out here. Trend is still our friend. Now, let's go take a look at the monthly time frame chart. I apologize if this is a little slow. I don't know how else you could interpret the market and what it's communicating to you other than just simply by doing this. We're trying to understand where support and resistance is. And when we take a look at a monthly time frame chart out here, what we can see is that we have a brand new monthly profile that formed. Now, I turn off price right now just simply so that you get the gist and understanding that the top of this monthly box, which was priced at $28.92, this is a bearish structured box. Now, we say bearish in structure because the center line of that box is at 28.28. So between 28.28 may seem like a lot of points. Remember, this is a monthly chart out here. And 28.92, what are we looking at? About 60 some odd points out there, 64 points, give or take. That is where the sellers are lined up out here. And if the sellers can really push price below 28.28, remember 2,800 is the number that we're really looking at from a daily perspective, then you could be looking on a monthly basis at a push down to 25.75. That, from a long-term trader standpoint, as long as that holds, price holds that level, there's no change in trend out here. If we look for trend lines, longer-term trend lines, just trying to find something that is really prevalent to what it is that we're looking at right now, it's really the long-term trend line, right? The long-term trends off of the lows out here back in 2009, as well as the lows out here in 2011. And what we can see with regard to this trend, and why the trend is your friend, is simply because the push lower inside the ES Mini back in December was nothing more than a test of support. Now, that support, it broke through the monthly profile. So it breaks through it. Where's the next level of support? Well, in this case here, we can see that it was nothing more than the trend line out here. 2 trend lines from a longer-term basis. So prices just simply revisited and moved down there. But here's what we know right now. Remember, we're still in a consolidation when it comes to the Dow. And real resistance inside the ES Mini is 2892, and it's a bearish structured box out here. So it is conceivable, whether it's today, whether it's next week, until the highs get taken out, we're in a consolidation. If you can't bust them out to the upside, you most certainly could bust them to the downside. Bust them down to the downside? Kind of poor grammar there. Okay, so this is what we know about the monthly time frame. What do we know about the quarterly time frame? Excellent question. If we take a look at monthly profiles here, and these are really cool for long-term traders, because once you bust through the top or the bottom, resistance or support, it is a telling message. For example, coming off of the highs in 2007, there was a close below the bottom of a box. In fact, it was really 2 for 1, and that was in January 2008. Well, we have a new quarterly profile. It matches up almost with the lows of last year, 23.27. Now, prices basically run up to resistance, 28.85. There's a pretty decent chance at this stage here that we're at a high and possibly a pullback of meaning. Not till 2800's broken. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go take a look at a request here. This came in at about 3 o'clock, 3:03 a.m., and this was a request asking if we could go take a look at Amazon and Netflix out here. So the first chart up on our screen is Netflix, and if we just simply take a look at at 3 different time frames that we have here, daily, weekly, and monthly, what we're going to see is that Netflix, as long as it closes below 366.20, what we know is that it is up at resistance. Not in daily. The daily profile shows that price. We'll take a look at the daily chart, see if there's some other signal out here that needs to be watched with regard to Netflix. But Netflix on a daily basis, by the way, support first level of sports can be 353.63. But we can see on the daily and the monthly, yes, the monthly is not over. It's not completed. It's only the 22nd. But what we do know is the resistance where the sellers are hanging out on a weekly basis is 366.20. On a monthly basis, 374.24. And so we're up at resistance out here with regard to Netflix. And one of the things you want to know is where were the resistance levels? You were asking on the daily basis, but really I would be doing you a disservice, and I will just simply never do that. It's against everything I believe in. So in order to do you a service, we need to really take a look at these multiple time frames to get a feel for what's going on here. Now, here's the other thing that we know about Netflix. Now, look, many instruments, when they make their tops and their bottoms, it's never that first low or that first high. That's the problem. It's the secondary one that follows. It's especially the secondary one when it meets the parameters I've established inside the Rhodes Momentum Indicator system. And the reason why that system is so important is because if you go back to 1865 and you take a look at every bear market that has occurred since then, this pattern has preceded that. So if it has worked to be able to catch those types of tops, and it's also catches a lot, it's not the only pattern that will catch tops and bottoms, but when it's present, your radar detector should be going off. When Netflix made its bottom back in December, it was making that pattern. And on December 26th, that was the confirmation that that pattern was complete because of that key reversal bullish engulfing session, let alone it was the 8 count of a Tom DeMark setup 9 count out there. So you had a couple of different things that were identifying the bottom. Well, today's candle formation out here is another indication because you've got a bear sash candle. Yesterday, price was moving higher, doing it with less relative energy out there, so our black lines continued to extend. But here's what you know about Netflix. This doesn't say you have to sell. This just says, at this stage of the game, you should anticipate a pullback. Now, with price being below Stevie's green line out here, what we would do is first, we would always pay attention to that red solid line. That red solid line, the beginning, or the low, I should say, of that Tommy DeMark setup count, and that low is 328.15. But before 328.15 gets tagged, we've got 353.63. That's the level that I think you should be watching inside of Netflix as just a natural pullback. Below that, then you would anticipate about 334. I think I gave you 328. Those would be the areas. The same question, but for Amazon this time. So if we go take a look at Amazon, AMZN, Amazon trading right now at 17.79. We just do the same simple things. Now, when I say simple things, just referring to first take a look at support and resistance based upon its TAS profiles, daily, weekly, and monthly. Here's what we know about the weekly time frame. What we have is an old-fashioned breakout above the top of the box. That's 1708. Doesn't seem like Amazon's going to pull back or close below 1708. So this is looking bullish on the weekly time frame. On the monthly time frame, we're trading inside the box. The low back in December was nothing more than a test of the monthly TAS market profile of 1422 out here. Couldn't bust it to the downside. This suggests 1910 is where Amazon wants to run to. AMZN, I didn't type it there we go, now we've got it. So if we do the same thing on the daily time frame chart, remember the weekly and the monthly, they're giving us a little bit larger view of what the intention of buyers and sellers of this equity are communicating to you and I. On a daily time frame, so a bit shorter term time frame traders, what one has to contend with is it looks like today's session is going to confirm a time to mark setup 9 count out here, with yesterday being the high, count number 8. And as long as price closes above, with regard to Amazon, the price would be 1742.15. Seems fairly plausible that that will happen. No guarantees. Then you do have a topping pattern. Now that topping pattern here just says the first level of support is 1744. Another level of support is the low from September 20th. That's out at 1615 out here. And then you've got your profiles at the 1709. So there's your support level. Resistance. Really hard to find resistance on the weekly time frame. Well, not hard, not impossible. It's something you and I can do. We just have to actually punch it into the chart and see if we can see it. But no resistance from a weekly TAS market profile standpoint. Instead, the resistance level for Amazon on a weekly basis is this solid green dashed line. That takes us back to the October 5th high out here, and on a weekly basis that would get you into 1889.65. That's your real resistance area. So weekly, Amazon looks good. Monthly, Amazon looks good. Daily is suggesting there is a shorter term top that may have completed or formed today, well really was yesterday, with a further pullback. I gave you a couple numbers. The additional numbers there are going to be 1662, 1690 out there, and that takes care of all the questions in at this stage. Fairly quiet out there in TV radio land, so help me out here. It's 1:36 in the afternoon. 877-927-6648 or Steve at TFNN.com. Let's see, was there anything? I don't think there was anything else inside the den. So what do we want to look at? Oh, you know, Tucker had mentioned something about bonds out there, and kind of interesting that traders were going after bonds versus gold at this stage. Oh, we can also take a look at the spot volatility index. And I mentioned, hey, it's really more so about the U.S. dollar, right? Bonds are a great way, if you want to get out of your currency, whatever that might be, then bonds are a great way. And if you want to get into a currency, let's talk about what you might want to get into. Bonds are a great way to do that. So that just says you want to get into the U.S. dollar, and that's a wonderful way to do that. Now, it is, if we take a look at the way that these instruments are trading, where did it go? Here it is. Take a look at T-bonds. So here, remember, we talked about how T-bonds, in terms of U.S. dollars, hit their projected level in the 149 area. That was that measured move of the consolidation. If we take a look at Treasury bonds inside of euros, it's made a new high, higher high today by taking out the high from back on March the 7th. In terms of yen, yes, moving higher, but not taking out a previous high. In terms of pounds, moving higher, but not even taking out yesterday's high out there. Was another indication, another reason to say, okay, I see what's going on. We see what's going on. This is kind of your flight to quality, so to speak, with quality being, I'll take U.S. dollars when everything is said and done. Long live the king. And I'm not referring to the king of beers. I'm referring to Obi-Wan Kenobi's king dollar, trading out at 96.18. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which should you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 376. Russell 2000 off 48 points. That's 30% to the downside. We're going to go to one of those mile-high cities out there. I think it's pretty close to a mile high. And that would be Fort Collins, Colorado. We're going to speak with Mark. Mark, thanks for calling. Thanks for holding. How close to a mile high is Fort Collins?
I think we're pretty close. I actually don't know the exact elevation, but I think it's right there.
Okay. All right. Good. All right. That's a pretty good guess on my part. So you want to take a look at the Russell 2000, and how can I help you there?
So I'm short via the TZA. It looks to me like we're breaking a B point with volume. Wondering if you think that's an ABC down as well, or if you have any other analysis of that. And then I don't know if you've got time after that to look at the SMHs or the stocks index. But let me know what you can do.
Hey, you're on the call, so this is good. So you're looking at the daily time frame first for the IWM. Is that correct?
Yeah, it looks like it made a high. Where was it? On the 25th at 159.50.
Right.
Low on the 8th at 150.61. We are below that right now. We're getting close to it again, but we've already done more volume than that day.
Yes, absolutely. So let's just say, if it's an A to B equals CD to the downside out here, folks, and I'll draw this in on the screen out here, then what Mark is looking at, and he's just really trying to identify some price projection levels out here. He's looking at the first one. This is the IWM would be 147.64. The second one would be 145.22. When I say the second one, it would be an expansion of the A to B leg out here. So that would take you to 145.22, 142.15. And so if Mark is correct in that we have an A to B equals CD to the downside out here, and in order for that to occur, what Mark is looking for is a close today at the end of the session below 150.61. Because as he's pointed out, we are already above the volume that was generated on that March 4th. That was 117 million. We're already at 128, and so it closed below 150.61. Says, yeah, you'd have a confirmed A to B equals CD. If price does not close below at day's end 150.61, because in essence it acts as a swing point, it would suggest that price would get back down there and test that level. So I do see that. One of the other things that I would be looking at, Mark, at least one of the other things, would be taking a look at what's going on the futures contract and see whether or not there's levels of support that are really key that have also been busted. And I would be watching the 1505.88 level, and that is the bottom of the weekly profile out here. I would say a close below that would say, yeah, now that would be a secondary opinion from a support level out here that would say, yeah, we could see price moving down into that range. So watch 1505.88. If that doesn't get broken, we may have the A to B equals CD to the downside, but a real key level of support will at least have held, you know, as of today. That's what I would be looking at. On the daily chart for the Russell 2000 equity futures contract as well, and I put up my other tools, there's two time to mark setup support lines that are out here. And Mark, one of those is the trading session from February 11th. So that is another key level out here. Now on the Russell 2000 equity futures contract, the bar you're looking at is really March 8th. So that would be the larger A to B equals CD to the downside. And that was a hammer candle, and the low of that hammer candle was 1517.60. We're at 1517.50, 10 cents out there. So the larger A to B equals CD to the downside, you know, a close below the low of the hammer candle, you know, we know that says if you're long, you're wrong, but that still just gets us down to about 1497. Maybe that was similar to the A to B equals CD that we looked at on the IWM. I don't, you know, it looks fairly similar. But right now, from a Russell 2000 standpoint, you're really trading right into a couple of levels of support, right? The bottom of that daily profile, this hammer candle out here. Then you've got a Tommy DeMark support trend line that was established from the low of February 11th out there. So it's really going to be all about the close. What we can say, or what I'd like to say as a 147 in the afternoon, is the Russell 2000 getting beaten, was been taken out to the woodshed. But so far, trading right down into some levels of support. Does that help?
Yes, it does.
Okay, all right. Was it a long-term trade, a short-term? What's the...
Yeah, pretty short-term. I took the trade a couple weeks ago and then made a good profit on it, got out, and then I got back in. I think I got back in a little early, so it took a little bit to get back positive on it. So I was just kind of getting a feel for.
Yeah, so before we go to the SMH, maybe consider this, and that is, where does the spot volatility index finish at the end of the trading session? In other words, right now, Mark, the spot volatility index is up $2.79. Price is above the 50-day exponential moving average. The 50-day exponential moving average for the spot VIX is 1609. We're trading at 1641. But that one-day rate of change that's greater than 10% has a real high probability of seeing some type of market bounce the following session. In this case here, it would be the Sunday, Monday session out there. Now, that's really taking a look at the S&P 500. But if at today's, so I would just throw that out there. You know, if it's a shorter-term trade, support is holding, as you and I have taken a look at it, you've got this one-day rate of change out there. I guess just consider that in your decision as to what you want to do over the weekend.
Sounds good. That's good information.
Okay. So the SMHs was the other that you wanted to look at. And the I tell you, the semiconductor index, it's a tough one. What are you thinking there? What are you looking at when you take a look at the semiconductor index specifically?
Well, God, the thing that seemed out of control crazy, but also it looked like it potentially was doing an ABC up. So I didn't expect that to happen, but I've been watching it and trying to figure out where this thing's going. So would love to hear your thoughts on that as well.
So here's what I would say. So are you leaning towards the A to B equals CD up, or are you looking at a top? Which one are you leaning more towards?
My brain says no on the ABC up, but looking at it, it says yes. So I'm trying to decide what to do here, just to watch it. So
got it. Okay. Well, let's go with your brain. You know, your first instincts are usually the best ones out there. Let's not second guess you. So, on a daily basis, specifically, what transpired? So we got a topping signal, Mark, on 2 days ago. But what happened was we got a signal, but not a break of support, because price pulled back right to Stevie's green line out there, and it needed to follow through the following session. That was yesterday. Follow through? Are you kidding me? That thing was a rocket ship to the upside, right? But what it also may have done, well, it was the 8th session in a row where the close was higher than the close 4 bars earlier. And it looks to me like the SMHs, if they close above 105.93, we'll get a confirmed 9 count out there. And this could be a short-term change in trend. Mark, hold on through this break. We'll finish it up when we come back to you. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So about 4 questions came in from about 1:40 on, 5 actually. So my apology, won't be able to get to those, but I'll try to respond to each of you individually there, just simply for taking the time to write in. Much appreciated. So Mark and I are taking a look at the SMH out here, and his instinct is that even though he sees the potential for a long out here, his gut's saying, nah, maybe not so fast. So, we know that we've got this, what looks like a 9-count system out here, which can identify a change in trend. So we're not going to be faked out, Mark, you and I, we're just not going to be faked out by yesterday's move higher because it generated the potential for a topping signal. And then what you and I are then looking at is what else? Is there some other resistance level? Because it's not on the daily time frame chart, that's for sure. And it's not on the daily time frame chart as far as market profiles because the top of that box is 104. It's not on the weekly time frame chart either because the top of that box is at 104.48. So we got 2 104s, so to speak. Volume this week is pretty good. 32 million shares moving into before 26 and 23, so certainly pushing swing points with highs out here. But the resistance at those highs really was established by the monthly time frame chart, and that's at 109.87. So it's got this potential to set up some type of high out here, with support being 102 to 104 would be the range that I would be looking at. Maybe it's not going to be the right reward risk for you out there, but that's what I see. What questions do you have just in the last 30 seconds or so based on that information?
Well, that kind of makes me, gives me a thought that maybe I wait for the to go long on that thing and to see if it holds that 102 to 104 range, because it does look like it, with the volume and the break of the swing point, it looks like an ABCF.
Yeah, even its swing point from I think its all-time high, the SMH's, was March 12th, and it's traded basically into that this week, and that only had 24 million, and we're at 32 million. So I'm inclined to say this one's a little bit more difficult to navigate, but I think it's set up for a little bit of a pullback. Hey, Mark, good to speak to you. Have a nice weekend. We'll look forward to speaking to you again. Everybody else, have a great weekend. We'll see you on Monday.